Hi, this is Alpha from Money Made Simple, and welcome to my tools tips. Today we're going to look at superannuation, which is very important to consider how if you'll have enough money in retirement, and you even know what your number is. How much do you actually need to have for retirement, and then also what kind of income per year can you expect? So there are a couple of tool calculators that are already available. So I thought I'd just take you through one from the Money Smart Australian Government website, just to show you how to use it and also the differences little changes can make. So we'll go into that now. So I'll just get my my screen up to show you. And here we go. All right. So the website, if you can see here at the top, it's moneysmart.gov.au. If you even go there, you'll see tools and calculators, but how super works and the superannuation calculator specifically is what we're going through today. And I realize it's one of those things you're like, oh, it's so far in the future, or you're like, oh my gosh, it's coming. I know I need to figure this out. And there's no magic number per se, and everybody's situation is different, depends on the kind of lifestyle that you want when you're retired. Obviously, there's certain basic expenses that we'll all have, so there's that to consider. But then, do you want to travel? Do you want to go out to the theatre? Do you want to be able to do things, pursue hobbies that cost money? Things like that you'll need to factor in as well, and just to think about how much you actually spend per year now. Obviously, your expenses get less the older you get, but you still need to consider what you'd like to do and make sure you factor that in. So I've pre-populated a few things, making some pretty broad assumptions here, but let's just assume you're 40 years old and income per year is $100,000. This is before tax, so this is gross. At what age do you want to retire? I've just put here 65. That's the age I would like to retire, if not earlier. But it might be 70. It depends what you do and how much money you'd like to amass and where you started in your journey as well. If you've moved to Australia and you haven't been earning superannuation since you were sort of in your early 20s, you might need to work a little bit longer, or put extra contributions in, which are some of the levers that you can pull to get where you need to go. So then we'll go down to, super, let's just assume $100,000 super balance. This is maybe a little average, hopefully, but anyway, we'll keep to round numbers. Employer contributions have recently increased from 9.5% to 10%, so we'll leave that there. At the moment, let's assume that you're not putting anything extra in. We'll come back and revisit that to see what kind of an impact it makes. Now for the fees. This is always the tipping point and the crunch point in terms of the type of super fund that you've got. And it's very important to actually read through. You'll probably have received your annual statements for the end of the financial year, probably around September. Have a look in there and just see what your fees are and what your returns have been as well. But we'll focus on fees to start with. So $300 is relatively average. Some fees, some funds can actually charge up to about $600, which is horrendous. So you want to try and keep it, preferably the lower the better. But then it also depends on the performance that you get as well. So quite often you get what you pay for. So let's just assume $300 fixed annual fee. And now in terms of, oh, and by the way, I had to actually select instead of default, which comes up like that. I've just gone and selected other, and then I've manually put in the 300. Back to here, and that's how I got to there. So investment options, the same thing. That was the default that was there. I'm choosing to override that and say an investment return a little bit more. This is an average to consider across the life of your fund. Most funds have done between 15 and 20% for financial year 21, but that's not going to continue every year. So I'm just assuming an average of 7%, which is pretty conservative. Tax, superannuation funds get taxed at a cap of 15%. However, there are also tax credits that are often earned, so it's not generally just 15%. So Money Smart assumes 7. I'm going to just put in 10 again to be conservative. Investment fees. Now, I've looked at my super funds because I thought I'm curious as well to see if how they've changed. Mine are at 0.62%. The Money Smart website had 0.85, so I'm just going to put in 0.7 for now, but we'll see how that impacts things as well. There is an alternative scenario that we can run. So let's have a look at the results. So at the age of 65, your funds balance will have achieved $452,766. Fees paid $65,000. That's quite a lot. It looks like a lot, but it's a number of years, 25 years, but nevertheless, that's a lot. Now there's a comparison that can be done. So I've already pre-populated some of this as well. So I'm going to assume there's no withdrawal fee for now to keep it simple. And the fees now, instead of being $300, I've looked at $200. So we'll see what kind of an impact that makes. Investment options, again, I've kept the return at 7%, the tax at 10%. And instead of the 0.7% fee, I've made it 1.4. So it doesn't sound like a lot, but it is double. And let's see what happens to the fund. So with that, just by getting less of an investment return, even with lower fees, you're still actually getting about $40,000 a year, or sorry, $40,000 in your fund less. So it's quite substantial. So you really need to focus on the main two things is the fees that your fund is charging, and then also the investment fee that it's charging for the investments itself. So different funds, even within your fund, you can choose different investment options, but it is important. I realize the fine print can be boring and laborious. Even if you don't want to read through it all and you actually email them, make them earn their fee and say, I want to know what my fees are for any given year, because that isn't always particularly obvious in the annual statements either. It's probably buried in there. But if you want to call them up, send them an email and say, I want to know what the annual fees are. I want to know what the investment fees are. I want to know what are the fees I'm paying outside of tax on the funds that I'm in. And if there's an investment option that they can suggest that would lower the fees, ask them that question as well. Otherwise, you might actually even need to look at it at changing super funds if the fees are too high, because it's going to eat into your balance quite substantially. There are some really good performing low fee funds out there. So there are options. So that's the balance factor or calculator. There is one more that I'll go through briefly as well. And this is the retirement planner calculator, also still from the Money Smart website. So this helps you calculate the amount of income that you'll have from your super funds, and then also from the age pension, presuming that you're eligible for that. So there are some limitations with these calculators. They don't allow you to flex around a little bit too much, but it's good to give you an indication at least. So you've got your number that you're going to get when you retire. Oh, sorry, actually, before I forget, I'll go back. The other thing that you can flex here is making additional contributions. So if you change this to yes, and these are the before tax, so the salary sacrifice contributions that you can make up to, at the moment, it's $25,000 per year per person. So you look at how much your employer is putting in on your behalf, the mandatory 10%, and then you can put in extra. You contact your HR department. There's usually a form to fill in to do this, and then it just automatically ticks away in the background. I've been doing it for years, and my employer actually also had matched my contribution too. So I was closer to almost 14% contribution. And I haven't even noticed. I haven't missed the money because it was never there in the first place. So it's really quite handy. In terms of dollars, between $400 and $500 a month, I've found has actually been the sweet spot. So if you can manage $500 a month, just have a look at the difference it makes. So we've gone from, what was it, 450,000, 454,000 to 614. So that's an extra $50,000 just by making $500 a month contributions, just little by little, 3 years. That's probably going to be almost 2 years of extra living expenses. So it is quite substantial. So I would highly recommend that you do that. All right, so we'll go back to the income. So again, we're assuming 40 years old, $100,000 of income, 65 years of age when you want to retire. For now, we'll just keep it simple and assume single, just because it starts to get convoluted if you're adding in your partner or your spouse. Again, we'll look at the moment, there's $100,000 in super, contributions from the employer. We'll stay without any additional contributions for right now. And we'll also assume that if you've had to take a career break to have children, that's already happened. So I'll say no for this. You can make change that to a yes, and then put the reason. So, parental leave, and then the start and end date, and percentage of income. You can put a rough percentage there to get you started. But for now, we'll just keep it simple and say no. So on this basis, there's an estimated annual income of $40,000 per year. That's for the first couple of years, income's coming solely from your super, and then it starts to even out to include the age pension and the super, and this will get you to age 90. So and $40,000, to be honest, for a year is very reasonable. I think anything 35,000 to 40,000 would offer a very comfortable retirement. Less than that is manageable. So the 28 to 30, 35 is manageable, but to have like a really nice, comfortable retirement where you'd like to travel and go out and do things and eat out and participate in life where there's paid activities, and it's going to be good. So again, I'll just make a change to show. So we've got, what's that, 40,000 a year, and let's just add in those additional contributions. And again, we'll make it $500. And that, recalculating, that changes it to 44,000. So that's an extra $4,000 per year that you get and that's just income, by having made those extra contributions over the years. So it's something I always recommend to my clients to do, because it's easy, it's simple, and if you start it now, you won't even miss that money. It's pre-tax. You just have to watch that you don't exceed the super contributions cap, which, like I said, at the moment it's 25,000. It will be going up incrementally in the next few financial years. There are some additional settings here that you can play with if you like if you think that your returns are going to change pre and post retirement. That's trying to crystal ball a bit, so I haven't gone into that. And then there's also some additional advanced settings if you want to adjust for inflation. To be honest, I kind of build all that into the 7%. I'll go back up. Into the employer contribution. We haven't got the investment fee, but you can go into that a little bit more. But at the outside, you at least find out what you need to be contributing. So it's not just as random as it possibly is right now, because let's face it, we don't learn how to do this. Nobody takes us through it. So it's very difficult to try and calculate. And unless you go and pay a financial planner a lot of money to get to this information, it's quite difficult. But now you can do this, the front end loading yourself. You're armed with questions, and if you then do want to go to a financial advisor or an accountant to go through this in a bit more detail, you're armed with a bit of information and you're more informed to ask the right questions. I'm all for personal empowerment. I do rely on professionals when I need to, but I like to know what I'm talking about and what they're telling me as well. So I hope you found this video useful. If you have any questions, please shoot me an email. The email address is support@money-madesimple.com.au. Thanks for watching.